day, and welcome to the PSG Wealth Global Solutions presentation. And this webinar focuses on the month of July, or rather, the data is as at the month of July. We'll start off by looking at just 1 month return, looking at different asset classes, both local as well as offshore. The focus of this slide will start from the left, moving on to the right. Whilst if we look at the left, which represents the local asset classes, we see that the local equity with the outperformance for the month of July, with both local cash as well as local bonds managing to contribute positively towards the market, or rather different portfolios, whilst the local property detracting, still finding a challenge within that space for the month of July. If we move over to the offshore asset classes, what we then see is across different asset classes, they have managed contributing positively, with offshore property and offshore bonds taking a lead respectively at 4.08% as well as 3.81%. Offshore equity and offshore cash also managed contributing positively. And if we now look at a longer investment horizon, what we notice is, starting from the offshore asset classes, moving to the left to the local ones, what we then see is the offshore equity as well as offshore property, being aggressive asset classes, managed outperforming conservative asset classes, those being offshore bonds as well as offshore cash, with the least being cash at 5.43% return over a 7-year period, with the most being 15.05%, that being the offshore equity. It becomes a slightly different story when it comes to the local market, where we see that local bonds managed outperforming other asset classes, being the second best in terms of performance, the local equity. So the list locally in terms of performance over a 7-year period were local property, and that detracted 52 basis points. And if we were then to look at our local solutions at PSG and see how they actually fare in terms of performance through ranking table, so the quartile ranking table. So what we then see on this table is the different local solutions that we offer at PSG across time, how they were ranking, being either in the first or second or third and or fourth quartile. And starting from the top, moving below, we see that the PSG Wealth Enhanced Interest Fund of Fund, being the most conservative amongst the portfolios, has been ranked across all measurement periods in the first quartile, and since inception has been ranked second, where the 5th and 6th year it's ranked the first within its sector. Whilst when we look at the income fund of fund, we see that though it is experiencing challenges in a shorter period of time, but over a longer period of time, the solution is robust and offers and contributes positively towards the overall portfolio of investors, with the since inception ranked being ranked 9th. And this obviously looks at the number of funds of 107, so being ranked 9th out of 107 clearly indicates that investors' goals will be reached by having the solution within the overall portfolio. Whilst if we move on to the preserve as well as moderate, we also see the challenges within the short space of time, but over longer period of time, as well as periods that are between 3 months to all the way to 2 years, we see the fund yet again showing its robustness. And for periods greater than 4 and 5 years respectively, between the preserver as well as the moderate, we see the fund continuing to show its robustness and its strength towards achieving the client's investment goals. Well, since inception rank, what we then notice is that the preserver is ranked 8th from 108 funds, whilst since inception, it is, as of this point, ranked 8th as well, the moderate, given that the number of funds are 202. When we move over to the last one, in terms of the local solutions, the creator fund of fund, we then see that for periods greater than 3 months, this fund has been ranked average and mostly above average in the first quartile. Since its inception, it is ranked 10th from 169 funds that we look at within the sector. And what is really the conclusion, or rather the picture that has been taken here, is that investors' goals are achievable through the PSG Wealth local solutions. Whilst when we look at just the highlights within these solutions and what really amongst the build-up of the solutions managed outperforming and which ones managed really underperforming. And by underperforming, that does not necessarily mean they underperformed the bench, but it also includes that amongst the funds that build a solution, this one was the least performer. Whilst when we look at the PSG Wealth Enhanced Interest Fund of Fund, we see that the Prescient Yield Quant Plus was a top performer amongst the funds that build the solution, with the PSG Enhanced Interest being the bottom performer. The fund has a minimum of 1 year investment period, and this is the recommended investment period. With that investment period, it has returned 4.27%. With the Income Fund of Fund having the PSG Diversified Income Fund as an outperformer, whilst the Momentum Income Plus was the least to contribute towards this portfolio for the month of July. And the overall fund managed returning over a 2-year period, which is the recommended minimum investment period, 13.717%. Whilst the PSG Wealth Preserver Fund of Fund and the 91 Cautious Managed Fund is the outperformer, with the PSG Stable being the least performer. And over a 3-year recommended minimum investment period, the fund managed contributing 6.65% to the overall portfolio of investors. Whilst we then have that for the PSG Wealth Moderate Fund of Fund, the 91 Opportunity Fund outperformed, with PSG Balanced Fund being the least performer. And with the recommended minimum investment period of 5 years, the fund over that period returned 6.76%. And last but not least, being the PSG Wealth Creator Fund of Fund, having the PSG Equity Fund outperforming, whilst the Fairtree Equity Prescient Fund underperforming. It has a 5-year recommended minimum investment period, and over that period, it has returned 7.7%. There are 2 funds for the month of July which fell on the quantitative radar screen, and those are the Sim Inflation Fund as well as the Sim Balanced Fund. And what it actually means falling into the quantitative radar is that based on a time period of 1 month, 3, 6, as well as 1 year, if these funds have actually consistently over this period underperformed, we then put them on the quantitative radar. What that actually does, it's a radar that as a team, we then look at that fund and really see if there's been any material change that will deviate the portfolios from the intended investment philosophy as well as the objective. And what we have found is they have, though that they've underperformed, they have not necessarily deviated. And as a result, we still continue to believe that based on research by the team, the solutions will continue, and these funds will continue to contribute as expectedly into the solutions to achieve the overall investors' financial goals.